Hey everybody, and welcome back to the LAGFX Sunday Sessions video. For anybody that's new to the channel or just new to this series, it's basically a weekly video we come out with where me and Luke, we run through the markets and show you our best investment opportunities for the coming trading week. So we go into the markets, we show you our analysis and give you our predictions for the price of that market in this coming week and show you ways how you can ideally be on the moves that we believe are going to happen. So without further ado, I'll jump into the markets and show you some of the pairs that I'm looking at for this coming week. So jumping straight into things, I've chosen to start with the XAU to USD or gold market. To anybody who has been keeping up with these Sunday session videos, you will know that I've featured this market on my segments many times now. I've been waiting for this move to happen. I've had this zone highlighted and quite simply we've been waiting for price to trade up. We had that liquidity clearance, which I first predicted to happen. That came through. Price is now traded up into this zone. And this is quite a large zone we've identified from this daily time frame. But we have to understand that within this area, the structure on a lower time frame isn't the nicest. It's very up and down. There's no clear supply zone or unmitigated position there. So I've decided to take the whole area, even though this gives us a large range. It still shows me that when price enters that region, we are waiting for the reversal in price. So I'll now dive into exactly what price has done because it has recently tapped into this and given us signs of a reversal. Okay, so as we can see here, the extreme high that is currently set in place in the market was what came to tap into that zone that we had identified as unmitigated areas in the market. So as we got up to it, price began to slow down. We did have a heavy rally at first, and then once price reached just below this area, we see that supply had definitely entered the market. Price was very hesitant to push further up. We then had a lot of liquidity build-ups with these equal highs. For anybody who's a technical trader, this was definitely an area of resistance that they were looking to sell from and ride the move down. However, before that happened, we had that break through the structure, set that extreme high in the market, manipulate people out of the market, as well as fulfilling that unmitigated position that we've been watching for some time now. So since then, we came down to set a low. However, in the scheme of things, this is still a higher low from the structure I will highlight now. So from this structure here, we see that this is still a higher low. So until this is broken, to me, a reversal is not fully confirmed. As I've highlighted here, you need to break this low to confirm bearishness. Now, moving onwards, as price traded back up, the reason I know this is an extreme high in the market is because we could not push past this high, meaning that it is now our protected high. And after this happened, and I noticed a distribution in the market, I definitely assumed that after this, our lows will be broken and bearishness moving forward was definitely something to expect. So after seeing this distribution, I was actually telling some of the clients to look for sells already. I said it is quite aggressive because we still haven't broken this low and given ourselves the full confirmation of bearishness. However, the signs are all adding up. We failed to create that high. We know the supply is definitely dominant now, evident by the distribution and lower time frame breakdown in structure. So to anybody who managed to get in on sells there, well done. But for now, what am I seeing moving forward? We've had this leg down. So using my 3-box strategy, I've highlighted this impulsive wave with my blue box. And then when I dived into that area on the 15-minute, I found what is a supply zone. So I'm hoping for either A, we can find a way to enter if price comes to mitigate this supply zone. If not, price is likely to continue trading down. And what we can look to do is find structural points as price unravels at the start of the week to look to trade from. Of course, we could try and be aggressive because gold definitely has the tendency when it makes these major moves to do so very quickly with high volume. So we could make an aggressive entry and try to enter in on price right now on the open, have our stop loss above this structural high and try to run it down. However, to me, that is just too much gambling in a sense because we haven't had enough confluencing factors to make that trade valid for my strategy. So overall, looking for sales on the gold market is the one for this week. I believe a lot of people are looking for the same, and there are some great traders that I stay in contact with. They've been watching this same movement for some time now and are also looking for those sell positions. So get ready and wait for next week to come and try and get those short positions on this market. Okay, so now diving into the Great British Pound to the US dollar. The main reason I wanted to include this in today's Sunday session video is because in my case study video that came out last Monday, I ran through this pair fully and gave you my predictions for what price would do moving forward. So if you remember correctly, I had this supply zone marked out, and then as price came up, so from the time of that video, price was around this point. As you see, market opened, we slowly traded up, hit that zone. We identified that distribution, evident by this green box here, and have since started to trade down. So my thoughts for this market is after mitigating this position, we're going to continue breaking down to meet this final target. So if we can find any sell positions in this region, we can try and ride those down to the final target. This is where we'll be using those slightly lower time frames to find structural points to enter from. Looking at this from simpler market structure, we can argue that from here, this is a structural high, a protected high in the market. So we could enter here, have that stop loss above the structural high, and then trade that down to the final target. However, this is personally what I would do. I'm not saying that this is something you should go away and do. I'm just giving you the advice of things that I look to do in the markets. Okay, so now I've jumped over to the US dollar to the Japanese yen, another market I have included within these Sunday sessions videos many a times. However, recently it's been a very difficult market to trade because if you guys remember, the analysis I did about a month ago now was that I wanted price to come and clear this liquidity point. Once it did that, after doing a range of other things in terms of market manipulation, if you saw one of the previous videos, I fully ran through this trade that I managed to catch from here. It is called the How We Made 10% in 2 days. Make sure you go and watch that one and you'll understand exactly what I'm talking about. However, after clearing this liquidity in the market and starting to break down, I thought this was a longer term or a wider scheme reversal in the market, and we're going to start a more longer term bearish run after that. So after being misled, as you see, I got some sell positions within this entire range. Then after setting that low, I assumed that price would trade back up. We'd find supply somewhere within that previous impulsive wave and then continue lower. However, price has blown through that and we started putting bullish structure in. Once again, we have invalidated that, which is why sometimes in the markets it is best to stay away, because at times like this where it is constantly changing its bias, it is very undecided on what that future movement really is going to be. When it's like this, I will usually try and stay away from it. However, just looking at it structurally, after this break in structure here, this is likely to confirm that we are bearish from now on. We could argue that because of this liquidity buildup from these equal highs, the purpose of this run up was to clear even more liquidity, absorb even more demand before that reversal happened. So I'll be keeping my eye on this. I believe that if this low is broken, I'll instantly come back and try to be a seller in this market. However, if you want to be slightly more aggressive, we could look for sells in this region, which I will zoom in on now. So using a 3-box strategy, we could take this last impulsive wave down, have that as our blue box, and then we could identify a supply zone within that, which to me is right here, our point of interest. So we could set an alert, wait for price to see if it trades into this region and try to get sells from there. That is probably the only thing I would look to enter on. However, as I said, because I don't really know the future direction of this market, I will stay away from trading it. However, to you guys who prefer those much shorter term aggressive entries, this is definitely something to be watching. Okay, now jumping over to the US oil market, this is another one that I included in a Sunday sessions video, maybe around 2 weeks ago. Now, if you remember correctly, I was looking at this as a distribution and waiting for price to trade down. Now, I must admit, I did believe that this here, this sign of weakness, was going to be the start of that bearishness in the market. However, price did push past, cleared the liquidity, manipulated people like myself at the market, and since then we have begun to break down. So after this break of structure, after breaking that previous low set in the market. This is now where bearishness for me is definitely confirmed going forward. I've identified that last buy candle before the move lower, so I'd suggest to anybody, if you want to try and get in on sales, I'd look to do so from that 78.1 to 79.3 region, and then try and ride that down to some points of interest lower. So that concludes my section within this Sunday session video. I've ran through a few markets there, giving you my predictions for what will happen within them in this coming trading week. Let me know if you managed to get in on any positions from this analysis. Leave it in the comments or message me directly. So I appreciate you guys watching my analysis, and I'll pass you over to Luke.
How are we doing, guys? Luke here. So before I jump into my analysis, what I always usually do is just go back on trades that I've done in the previous week and tell you guys how I've done, and then obviously show proof of that. So as we can see here, we did actually place a trade on the Euro JPY. It was a lovely return of 150 pips, and it was a nice 5-to-1 risk to reward, which is great. And it was quite simple, really. It was a break from this point here that we've got drawn out. And I was basically just looking for the right opportunity to jump in on this sell, as I am looking to ride this price down to this point here. And as you can see, it came through and we capitalized on this trade, so that was great. What I'll do now is throw up the screenshots of our entries and any analysis that we did previous to actually putting the potential entry point out to the clients. Now, moving on from that, this leads me to my analysis. Euro JPY is the first pair that I am analysing for you guys today, and it's going to be quite brief. I'm just going to give you my insight on what I think is going to happen. So looking at it straight away, obviously we can see that we've had a break from this point here. We've capitalised 150 pips, and what I'm basically looking to do is look for another good entry on this pair and ride it down to this demand zone here. I really want to capitalize on this bearish move down. What I'm basically wanting to see is a break below this point here, setting new lows, and as soon as we get these new lows, I will look to place my position based on either a candlestick formation or some kind of strong bearish structure. So like I said, it will just be a case of waiting for it to drop, say, another 40-50 pips, setting new lows, and then I'll break it down to the 15 and 5 minute, and then I'll look for a key entry. Once we've got that, I'll activate my trade, and then I'll ride it down to this point here. And yes, it's quite brief, but I don't think there's any reason to really elaborate on that. The analysis that I provided for you guys in the Sunday sessions for the past month or so has been pretty on point, and things have come through quite nicely. So yeah, just look for those sell positions, get those key entries, make sure your risk to reward is right, make sure you've got that confluence, and yeah, have faith in your trade and have faith in your position. So the second pair that I'm looking at for this coming week is Great British Pound to the US dollar. Again, it's one of my favourite pairs to trade, and we have capitalised from this pair the past few weeks, and we've done really well with, you know, predicting what's going on in the markets. Now, we've placed a few short positions and capitalised, which is great. We've then had the tap into the demand zone, the failed breakout, and then prices really started to accumulate here. Now, what I'm looking to do is capitalise on a buy position, as I do believe there are some points of interest here and here. Now, these are previous levels of supply, which I feel like price is going to tap into before we kind of see any interruption and any chances of reversal. So for me, again, it will just be breaking it down into the lower time frames, getting those key entries and jumping on the trade, making sure that my risk to reward is right. I've got a nice tight stop loss, a nice big take profit, and then just letting the markets do its thing. Now, why do I believe that the markets are biased to a buy? Well, we've obviously had the markets produce this bearish structure, giving us lower highs and lower lows. and it's failed to do that here, and this is something called an accumulation. Now this is something that happens before you see the markets push up, setting a new bullish trend. Basically, what I'll be looking to do is place buys on Great British Pound to the US dollar this coming week, and it will just be a case of getting down into those lower time frames and really finding those key entries, those sniper entries, and getting in with the tight stops and the nice take profits. Now, I say this every single week, my analysis is quite brief, and it's designed to be like that because I want to keep it as simplistic as possible. So I've said we've got, we've had lower highs and lower lows here. This is produced us with bearish structure. We've then had the tap into demand. We've had the failed breakout. It's then started to accumulate, which tells us retail traders that price is going to push up. And when it does push up, we have these areas here that I believe are really going to test the price. So when it comes to placing my trades, I will be cautious of these areas, and I'll probably set my take profits somewhere around these points just to keep my positions safe. And then, as always, I always say to keep your stop loss as tight as you can. And just ensuring that you are using the right risk management and you do have good RR with your trades. Now, if you want a more in-depth insight to my analysis, join our free group chat. Link will be in the description. And yeah, just take a look at our analysis in there. We post so much content in there. It's honestly a no-brainer. If you're someone that's trading the markets day in, day out, Monday to Friday, and you just want a bit more depth into the markets and just another pair of eyes and another insight into the markets, then it's a great group chat to join. But yeah, definitely biased to a buy on the Great British Pound to USD this week. And as for Euro JPY, I am looking to capitalize on some sell positions there, riding that down to the demand zone that I had drawn out. Now, if you guys have any questions or you're unsure about the analysis that either me or James has provided, leave some comments at the bottom of this video and we'll be sure to reply to you as soon as possible. I hope you've enjoyed this video. Don't forget to like and subscribe just so you can stay up to date with everything that we're posting. And as of Wednesday, we'll have another Learn to Trade video out, so definitely take advantage of that. So that does bring us to the end of the video. I know I've only analysed 2 pairs this week, but for me, I only like to trade on pairs that are really screaming out to me, pairs that are really obvious, and that I believe are really giving me the signals to place those positions. I think it's really important not to force trades, and if you're not seeing things in other pairs, don't bother trading them. Just wait for the market to do its thing and come to you, basically. So yeah, thanks for watching, and we'll catch you in the next Sunday session.